Hi, I'm Jeff Fischer, advisor on Motley Fool Pro, and I'm here as part of the Ask a Fool series today. Josh Fields asks, is it possible for a group of amateur investors to cause a short squeeze? In other words, how possible would it be for a large group of individual investors to get together and cause a short squeeze? Now let's talk about what shorting is briefly. When you sell short, you borrow shares from a broker that you do not own. You borrow them and you immediately sell them into the market. You get the proceeds. Now, what you're hoping is the share price goes down so that when you buy the shares back to return them to the broker, you buy them back at a lower price than what you were paid initially, and that's your profit. If the shares go up, you of course have to buy them back at some point at a higher price than what you received when you sold them on day one, and that's a loss. So a short squeeze is when shares are going up and up and up, forcing short sellers who have sold those shares earlier to buy them back at a higher and higher price, forcing them to cover their position and take a big loss. Is it possible a group of amateur investors could make a short squeeze happen by working together? Well, Josh, I don't know what you have in mind, but it would be very difficult to orchestrate this and make it happen for a few reasons. First, most short squeezes occur when a company when a company's stock is already heavily shorted. That means a lot of people, a lot of institutions, hedge funds have shorted it. So there are a lot of people on that side of the trade already. And then the share price starts to go up, which causes margin calls and which forces the buying. And that's how a short squeeze really occurs. You need a lot of buying power behind it to make it really happen. So that a lot of individual investors could get together and make it happen is unlikely because, for one, individual investors don't tend to short that much. And two, when they do, they're usually not shorting in large enough amounts, the hundreds of millions of dollars that hedge funds move, to really cause a short squeeze on most companies. Now, on some very tiny companies, you could maybe cause a small short squeeze for a short period, but for a sustained, ongoing short squeeze on a larger company, it's going to take more than just small investors to make that happen. Is shorting for everyone? Certainly not. It's not even for most people. But for experienced investors who try to make a profit when prices fall, shorting is another tool to have in your portfolio. That's Ask a Fool, Fool On.